Hi, everyone. Thanks for tuning in to Groundbreakers. On this podcast, we interview early stage founders and real estate investors to hear their stories that will let them have success in their career and their journey from zero to one. Today's guest is Thomas St. John, principal owner of North Corp Capital, a multifamily investment firm committed to disciplined acquisitions, operational excellence, and long term value creation. Thomas started investing in real estate back in 2006 while serving as a Toledo firefighter. What began with single-family rentals and fix and flips has grown into a portfolio of nearly 300 multifamily units under ownership and management. With 20 years of hands-on experience, Thomas is a true boots-on-the-ground operator and someone who knows how to drive NOI growth, improve tenant retention, and protect capital. Thomas, incredibly excited to have you on Groundbreakers. Thank you so much for coming on the show.
I'm just as excited as you, Domingo. Thanks a lot for having me.
Absolutely. And I know your current job takes up a lot of time. So it's a privilege to have you on. And honestly, would love to learn your story. Like, how did you get into real estate investing? You were currently a firefighter. Like, what led you to start exploring passive income? And yeah, kind of just walk us through your journey.
Yeah, I've always had like an entrepreneurial spirit. I think in 2006 when I started buying single families, a lot of people always refer back to like Rich Dad Poor Dad, and of course I read that, but I read a book prior to that that was a lot thinner, easier for me to digest. It was called the Parable of the Pipeline. I'm not getting paid for that reference, but that really spoke to me, and it was right around the same time my dad retired. He was worked 35 years in a power plant, and he had a heart attack on the golf course, and was kind of forced to retire. But I remember when he came home, they gave him a telescope, and I don't know why that it still sticks in my mind. Like 35 years, and he got a telescope, you know. And I kind of felt bad for him. He's shift work and raised all of us kids, and so I just was determined right at that moment to find a different way. And real estate just always appealed to me. Doesn't take a lot of capital up front. Um, and it just became my passion kind of overnight.
Got it. No, it makes a lot of sense. I actually haven't heard that book. I feel like Rich Dad Poor Dad's always the one everyone cites. It's like them learning real estate for the first time.
Yeah.
So glad to hear there's other books out there that get people into the real estate space. But curious for you, like what was the first project you worked on? Like, were you doing this while working a full-time job? And you mentioned like you've always been entrepreneurial. Like, what was your focus in real estate?
Yeah, I mean, I started, years before real estate, I was importing marble from Pakistan, like figurines, vases, and, um, selling it at craft shows. And just, I always was trying to figure something out, to just do on my own. But when I found real estate, it probably took me like 6, 7 months to get my credit straight, to get a little bit of money for any kind of down payment. And so that was really late, 2006. Um, it was a deal. I didn't have a kitchen. I mean, I had a kitchen, but no cabinets or nothing. So I couldn't even get a loan for it. So I actually borrowed money from a gentleman that was, he paid cash for the house. And I was about mid March, about 3 months later, I was able to fix the house up and get a conventional loan to pay him back. And then 2007, 2008, I acquired 6 properties, 6 other single families, um, just with the most creative, goofy ways you could possibly imagine. And then everyone knows what happened in 2008 with the prices, 50% of what they're worth. And so I always tell people I was kind of over ambitious, and I owned these 5 properties that were probably underwater. So that's kind of how it helps me sleep at night, thinking back of those properties I bought that were probably not really great buys. But in 08, 09, when the prices tanked, I didn't care. I knew that they were going to come back. But what some people don't talk about is the credit crunch. You couldn't borrow anything. So here I am trying to build a real estate portfolio, and you can't get any money from anywhere. So I did a lot of stuff that I would never teach or recommend to anyone else. But I used hard money, 35% down, 25% interest. I used crowdfunding platforms like Lending Club and Prosper. I used credit cards to finance down payments, and I just worked my butt off. And uh, always had 2 different jobs to try to offset any negative cash flow. But I just had a desire to acquire real estate, kind of at kind of at whatever cost. Um, since then, I've become a lot more disciplined on how I approach that, but that's how I started.
No, that's crazy. would honestly love to hear, like you mentioned some of the creative ways you were still able to pull credit to get some of these properties. Like, given how expensive the interest rates were on some of these, like that those numbers still make sense. And like, I'm
Well,
so curious when people do hard money for different deals because like to make those work, you really have to hit the, you have to get a home run almost. And so curious how you made that work and like some of the learnings you had in that
yeah,
experience.
it was a different time, 2008, 2011, that area. I mean, you could pick a deal off the MLS in Toledo, where I'm from, for 20 grand, $25,000. It's a perfectly fine, 900 square foot, 2 or 3 bedroom house. You know, it's going to rent for 6 or 700. And that's one thing in those times, the rents never went down, you know, so you could still, so I definitely was not positively cash flowing, but I was enough to make my payments. And a lot of these crazy loans I did were like 5 year AMs, you know. So even at 25% interest, you're not really not paying that much interest only over a 5 year period. But it was just a way, because multifamily has always been my vision. But I felt at the time I had to build a track record. I had to have some units under management to walk into a bank with any kind of credibility that I knew I was doing. And so all the jobs I worked at during that time and being a fireman kind of allowed me to have a lot of spare time because I worked 24 on, 48 off. And so very quickly I was able to pay down these loans and build a little bit of equity. And it took me 9 years to buy my first multifamily property and 9 years of torment, that I don't, I'm not teaching anyone this method. This is a terrible way to go about it, but it's the only option I felt like I had coming from where I came from, which is kind of a war zone area of East Toledo.
No, it makes sense. I mean, I can't only imagine how hard it was to get credit in 2008. You're very determined to still get deals done and like still keep growing the portfolio. So by any means necessary, you found ways to make it happen. So I'm sure there was a ton of learnings from that, and
Oh yeah.
it's crazy things. It's always crazy when you think about like how cheap some of these properties were back then, and like now in hindsight, everyone who bought anything was like a looks like a genius.
Yeah.
So
Sometimes
awesome that you were doing.
I wish I still owned some of them, seeing what
Yeah, yeah.
they sell for now. But
But no, you mentioned like you were doing that. You were like truly grinding away for 9 years and then got finally into the multifamily space. Can you kind of, what was that first deal in the multifamily space that you did? And like, what market was it in? What made you do that? And was it just you doing it with your own capital, or did you bring in like outside investors?
no, my first ever deal, I borrowed $35,000 for it. I didn't ask another soul for money for 15 years after that. I always did it myself, my own money, my own um, work. I've never, only till recently, the last few years with North Corp Capital, have I really asked for help. I think that's, as a fireman and just being in sports, you kind of learn real estate's a team sport. No one's ever built a 200 or $100 million portfolio really by themselves. I mean, very few people probably. But yeah, the first multifamily property, it was actually a friend of mine who was very successful. I've talked him into multifamily, and he bought that. And a couple of years later, he was looking to scale, and I bought that from him. And it was kind of funny. At one point I owned like 52 single family houses, and I needed $50,000 for the down payment, and I didn't have $500. And so I had pretty much a fire sale. I sold 8 of my properties at auction just to try to raise the 50 grand. I actually came up short because the auction was a joke. It didn't go well. And I actually had to sell an additional property to come up with the money. I sold 9 houses to get, which, looking back, the 9 houses were probably more valuable than the multifamily, but I knew where I wanted to go. And so I kind of parted ways with these 9 houses and was able to draw enough capital to buy my first apartment building. That was early 2016, so it was like almost exactly 10 years.
Wow. And is that still a property that you're operating today, or like how long did you hold that one for?
That one was my friend didn't do a whole lot to it. He moved on very quickly to a larger complex, so there was a lot of room to add value. In 2015, 16, and 17, I was able to acquire 3 properties. like all that time, all that 10 years, I realized that buying multifamily was actually easier as far as the financing went. I don't know. I just didn't know that. The banks look at that as a little business, and if it can pay for itself. Um, so yeah, I own three properties, two 8-unit buildings and a 12-unit building. And I turned them, all three of them around there, 70% occupied, rents were way too low, a lot of deferred maintenance, kind of your very typical value add. And so I ended up packaging those together in like early 2018, and I sold all three of them to one buyer, and I walked away with like a couple $100,000, which it might as well have been a couple 100 million for me at that time. I thought I was rich.
That's incredible. I'm curious for you. So, like, I feel like going from single family to multifamily is always a lot of folks always talk about multifamily as like where they want to end up because you're doing so much more scale. Like it's easier even from like an operations perspective.
Yeah.
You mentioned even the financing is easier. Were there like what was the biggest difference for you? And did you have any big learnings on the very first deal you did where you're like, oh my gosh, like this thing really did not go the way I thought it was going to go, but now I know for every other deal moving forward, like not to make the same mistake.
Well, I don't feel the multifamilies. I had enough experience under my belt to where the multifamilies, and I read a book every week. I felt like I was very prepared when I entered the multifamily space. I've hardly made, not to. I'm sure I've made some minor mistakes, but I've never made a terrible mistake with a multifamily. I'm super conservative. I I've done extremely well with multifamilies. The single families, I took a lot of shots. I probably didn't need to, but what I was so surprised about with multifamily is how easy they are to transact and how often they trade. You don't see it on the MLS all the time. Properties trade hands so often, and just by those key indicators like NOI, if you can increase NOI, that determines the value. And there's almost always buyers out there for multifamily properties. So when I started buying multifamilies, if I could answer two questions: can I sell this tomorrow if I absolutely have to, and if I have to hold it for the rest of my life, am I okay doing that? And I always had to answer yes to both of those questions before I move forward. And that's probably like a little bit too conservative of approach. I've probably stalled my growth maybe because of that. But I sleep real well at night knowing that I can sell it tomorrow and I'm okay holding it forever.
No, it makes a lot of sense. And so these multifamilies that you're doing, was this like under North Court Capital or was this under like yourself doing it and like before you actually launched North Court Capital?
Yeah, this was just a different LLC I had. I still have currently. Just doing it myself. And at that time, it took me to get into three buildings before I, hired a maintenance guy. And I talk about like boots on the ground and stuff like that. That was like the literal definition. I was the guy with the truck, with a utility truck with pipe wrenches, and I used to stock it from Menards. And I had it real organized, with materials. And I was the maintenance guy, the manager, the leasing agent. I was everything. And that's not scalable. I learned that pretty quick.
What did you peak out at three different multifamilies or when did you feel like you couldn't do it anymore? Just you.
Well, at that time I had 72 units,
Okay.
multifamily, and at that time I still owned about 10 single families, and I found myself where a vacancy would go 2 weeks longer than it normally would. Um, any kind of maintenance that got, and I called plumbers. I always had HVAC guys and stuff. I didn't do everything myself, but I did almost all the turnovers myself. But when I found like the service started to lag a little bit, that's when I brought in a team. But that was also life changing too. And that was actually right around the time I had my daughter, and so it was a no brainer. Coming home from work, waking up in the morning, and you she's standing at the foot of the garage watching me leave. That was a big motivating factor for me to just ask for help, and hire people.
Yep, yep, yep. No, it makes a lot of sense. Curious for you then, like when did you feel like, okay, I'm doing these deals on my own. I probably hit the cap of like what I can fund myself. And or maybe you're thinking like, I want to start scaling this faster and I want to start taking in outside capital. Like, what was that moment for you? And then what have you done since then?
Yeah, that was a few years ago. I mean, I a lot of what would happen is you'd see deals come across your table. Brokers would call you. You don't have great relationships with brokers here locally, and I just couldn't do anything about them. Like I couldn't actively pursue them on my own without selling the previous property. And that's always an option. That's not a bad thing. People talk about avoiding capital gains, and true, you should, but also paying capital gains isn't the end of the world too if you're making money. I've paid capital gains several times. I enjoy doing it. But I just too many deals where I couldn't pursue on my own without selling something else, and so um, that's when I decided, to build a team. And one of the first things I did, I sold 30 more units, like right around the time when COVID started. Um, I made another huge chunk of money. I was living high, and I evaluated a deal kind of out of state. Um, I spent a lot of time analyzing all the numbers, everything worked, and I put a bunch of capital towards this particular operation, this new development, and I lost I lost a lot of money. I lost about half of what, well into the six figures. I lost a huge chunk of money, and that's when I realized that I didn't do a very good job of vetting the sponsor, the operator. He didn't have any bad intentions. It wasn't like he just didn't operate it well. He used the money for, we don't even know what he used the money for specifically. And that's when I decided, you know what, this probably happens to other people. That was my shot. And I went from zero to, $800,000. And now I have this chunk of money to do something with, to really make a difference, to change my family's legacy. And I almost blew it by choosing the wrong operator. The land still sits vacant today. So that's when I started North Corp Capital, because I want to be a caretaker for investors' money and do what's right by it. And I had to learn the hard way, but that's why I founded North Corp Capital, so other people don't have to learn that lesson.
Wow. So the big motivator was like getting screwed by another GP, and not in a malicious way, but just like, they were not good at operating the property, and you have a lot of experience. You're like, wait, why am I not just doing this?
Yeah,
And
exactly. Yeah,
helping others.
I mean, I've knew him, got to know him really well. I got to know the deal really well, but I didn't take a deep enough dive into his other businesses that were struggling. And like, he had a restaurant. He just was spread too thin and wasn't an operational expert in any of these areas. And so, like I said, it wasn't his intention, I don't believe, but it went bad, and there was really nothing I could do except start over. I mean, I didn't have to
Yeah.
start completely over, thank God, but yeah, I when evaluating a deal, this is what I do every day, all day. I have like an abnormal obsession for it. I enjoy doing it. I evaluate deals that I have no intention of doing or making offers on, just because I like to see what else is out there. I mean, someone else could evaluate a deal for 5 straight days and not have the understanding that I do. And so I feel like I just owe it to other investors, to other people, to put their money in the right places. Having failed to do that personally on my own, I don't want to, there's no reason for it to happen to someone else. So I felt like raising capital, even if it's not for my own deals, I also raise capital for other high level, top tier GPs and sponsors that have since vetted extremely well with proven track records, et cetera. And I have more confidence in putting investors' money into their deals. I'd rather lose my own money again than someone else's. But that moment back in like 2020, 2021, that shifted my focus a lot.
Yeah. So I guess going off of that, so you said you do your own deals, but you also raise capital for other people's deals.
Yep.
And you mentioned like, someone can spend 5 days looking at something, but you think like you basically have like a secret sauce when it comes to diligencing deals. And I'd say a big piece of it just because you love it so much.
Yeah, you have to
What do
love
you
what
feel?
you're doing.
I agree. I agree. What do you think is that like, edge that you have, or like what are you looking for that maybe people make mistakes or don't see, um, for early stage GPs that are listening in that they should keep an eye out on?
Well, I think it's really easy on a spreadsheet, like on a deal analyzer, to change a couple numbers and get a projection. Anyone can change a number on a spreadsheet. Well, I'm very good at identifying that. I do like a real thorough stress test to see what could go wrong. Like in this market, when I see people have 3, 2, 3, 4, 5% rent growth projections, I almost immediately stop what I'm doing and move on, because I just don't think you can even truly underwrite or guarantee rent growth. And it's market specific for sure. And there's some deals that are no brainers, that they're way under rented. But just in general, I see rent projections incorrectly put into performas. Um, and I also see a major um, people really underestimate what it is to the operating expenses of a property, especially when you talk about like older vintage or Class C properties. I'm very hesitant for any. There's two things I don't do. I won't invest in a deal where the GP isn't an investor himself. There has to be a co-investment. That way, investor, um, that way you're aligned. Sure, that GP can benefit from the upside with everyone, but he has no risk of participating in the downside if it goes bad. So they have to be a co-investor. That's number one. And secondly, like an older vintage, if they're managed in third party, like out of state, then I take a real deep dive into that too. That comes from my experience of managing the property every day. So I'm hesitant. I'm nothing wrong with third party managers, but the GP has to that has to be baked into his calculations, because it's very difficult to manage a Class C property 4 states away.
Is there certain qualities that you look for in a GP, or like when you're having a conversation with them, you're like, this guy's a killer, or like he's really good at what he does? And like, what are those typical signs?
Well, things that I never had, like a back office, like leasing agents, asset managers, acquisition directors, a team. And I don't exclusively invest in people that have been doing it for 20 years, although that's definitely a plus. But yeah, just someone it has to be someone who's done it, like me, because then I can relate to them. You know, Even if it's the deal of the century, I have to enjoy working with them. You know, and I typically gravitate towards people who took a similar path as me, started with nothing, and self managed a portfolio of some size on their own. They have to know what it's like.
No, that makes sense. I mean, you learn a lot by being in the trenches yourself and like actually seeing, fixing things yourself, understanding like all the material costs, and that gives you a lot more insight into the operational overhead that you're going to have in flipping anything or like doing any sort of value add. I'm curious for you, like, what is it split for the type of investments you're doing at North Corp? Like, is it like 50-50, like you're the one operating the deal yourself and finding it and doing it and then raising the capital, or raising capital for other people's deals?
I would say it's actually more towards like 80-20, raising money for other people's deals that I invest in also. I have a limited amount of capital to invest, so I don't. But it has to be something that the GP is investing in. But
Yep.
like I said before, Toledo, Ohio, it's not attracting millions and millions of investors. There's not a whole lot of population growth and rent growth here. I just know the market so well. I know when there's a deal that can cash flow, that I can add value and turn over. So I'm very comfortable because I'm the GP. I'm the one doing it. And if I'm putting my money into it, I'm okay putting other investors' money into it. But when it comes to other markets, like the popular, Kansas City, the Carolinas, San Diego, those I look for other GPs that are going to be running the deal. Just because I don't think I'm serving the investor adequately by telling him, I can operate this with maximum efficiency from Ohio. I think that's just disingenuous, you know.
No, for sure, for sure. And I guess for you, like, so the operators that you typically invest with or like co-invest with on these deals, Is it typically like the same folks you're investing with like time and time again, or like
Yep.
do you have almost like a way of vetting folks that are net new that you're working with, or like how do you go about finding those right partners that you invest with?
Well, the one thing I do that I'm sure a lot of people don't is I fly out to wherever they're at and I meet with them in person. I walk their properties. Everyone will, everyone's website will show you all their big wins, all the deals that they went full cycle and made a lot of money. But I want to know what people's bad deals were. How did they mitigate losses? What was their worst deal they ever did? What did they learn from that? When you're an investor, if you earn 8% a year for a 10 or 20-year period, you'll be way farther along than someone that had a 24% year, then a 0%, then a 12%, then a negative 10. The roller coaster of what that does is it takes away the power of compounded interest. Albert Einstein called it the eighth wonder of the world. So I'm looking for people who typically have a due diligence criteria as stringent as I do. And I've developed a due diligence. Um, I do a due diligence on the sponsor as much as I do the property. But yeah, to answer your question, I guess more specifically, I have about 10 core groups that I'll invest with. I'm always looking for more, but there's about 10 different firms that are just rock solid, and I have no problem putting other people's money in those deals.
Got it. No, makes a lot of sense, and appreciate you sharing.
Flying
I'm
out there,
totally with you.
touring the properties, seeing them, meeting them, it goes a long way.
Yeah, no, no. And I love the philosophy of like asking folks, like what's the worst property you've done, like what things went wrong. I always try to even ask this on the show, and I appreciate your transparency with like some of your single families and the things that went wrong
Yeah,
when you were running them.
yeah. I've had some major flops. Anyone
As
that knows,
everyone does. Yeah,
everyone does. Yeah. Luckily, they were $20,000 houses, so they weren't $2 million apartment complexes. But
yeah. But so going back to like, okay, so you're working with like 10 different groups and like, working with them time and time again, helping them raise capital. They're in a bunch of different markets. What are the types of deals that you're personally most excited by right now? Like I'd say we're in an interesting market where I think we've been hearing that there's going to be like this debt wall or debt maturity wall in multifamily. People keep saying it's going to come in 6 months. It hasn't. Sellers keep like holding on. Things keep getting extended. Yet there's some folks that are getting some great like distressed assets. Like, so I'm curious for you, like, what are the types of deals that you're most interested in? Are there certain ones that you see getting funded more often? Like, curious where you spend most of your time.
yeah, I pretty much only do deals that are a Fannie Mae or Freddie Mac agency financing, just because it's cheaper, longer terms. So then you're mitigating risk by just having cheaper debt. Um, there's I like I told you before, I care way more about the sponsor than I do the market. But there are some markets like Salt Lake City that I think I'm really bullish on that. San Diego. Now San Diego's in California, which a lot of people, whatever political side you're on, it's just typically a tenant friendly state. But San Diego's not really like that. It's not like the Bay Area or LA County. In San Diego, there's hardly any new development. There's really nowhere to build. You got tons of people always moving there. So you have a limited supply, increased demand. That's kind of economics 101. So any deals in San Diego, I kind of perk up to. The Carolinas are really exciting. Everyone, those are always hot markets, but cap rates get compressed in those areas. There's just a lot of there's a lot of focus on them. So I kind of typically, if I'm looking for deals myself, they're going to be in areas where maybe too small for the little guys or too small for the big guys and too big for the little guys. Like I love Kansas City. I think that's really really interesting area, and I've done a lot of business in Indianapolis too. Indianapolis it's kind of like Midwest. People have their opinions on that, but Indianapolis, if you ever been there, if you're ever there 20 years ago, then you went there again today, it's like hardly recognizable. So those are a couple, and it's a short drive for me too, so I can be there.
No, makes sense. I guess moving forward, like, let's say you're very successful with the investments that you're doing. Like, where do you see North Corp Capital in 3 to 5 years? Like, are you just going to continuously keep growing? And are you raising everything through a fund? Are you doing like deal by
Yeah,
deal? Like curious where you see things going.
yeah. I started an SPV, special purpose vehicle. Some people call it a fund of funds. So you can invest with North Corp Capital on a specific deal. You get all your subscription docs, and all the information for that deal. And so what that allows is a lot of these top level, top tier deals are very hard for like an average investor to participate in. They might be a $500,000 minimum. Some of them may be $150,000 minimum. That's a big chunk of change for someone that just has a 401k and some savings. But as the SPV, I can raise $25,000 or $50,000 from 5 or 10 different people. Now we're
Yeah.
all co-owners of this LLC, and as the SPV, the special purpose vehicle, we can invest and participate in that deal. And and most GPs, the ones I work with, do they actually give my special purpose vehicle, enhanced economics. So when the waterfall structure gets laid out, if you look at their website, it might be like an 8% return or pref return with a 70-30 split. My SPVs typically always get an 80-20 split. So it's not a huge difference, but if you invest with me, for one, you're dealing with me. You talk to me. I answer my phone all the time, and you're actually probably going to get like maybe between 1% and 2% extra because of how I have structured the waterfall within the SPV. A general partner, they would much prefer to, instead of having 50 investors, they would much rather deal with 5 fund of funds managers and deal with 5 people. And then I get some enhanced economics based on that model. And this was new to me a few years ago. And when I kind of read about it, learned about it, I thought, oh, that's me. My plan is to be the very best at that. In my apartment, sorry, I'm rambling, huh? But my apartment is one of the best things I've excelled at is tenant retention. And so that you asked me what I want 3 to 5 years from now. I want my core base of investors. I want to be their real estate partner for life. Get a core base of investors that we can take down most any deal that we find attractive and move on.
Got it. No, I love it. So I guess last question for you, like thinking back on your career, like, you started off in the single family, you sold a lot of them to get into multifamily. You're now in like the fund to fund space and like now supporting other GPs. Any advice you give people early on in their own career, either outside of real estate or within the real estate investing career that you wish maybe you knew when you were first starting off?
Yeah. Well, what I did really well is read books. I know it's a very kind of trivial piece of advice, but that's your knowledge. I read books that I don't agree with just to get the other side a different opinion, like flipping dirt, for instance. How do people make money flipping raw land? I want to know how they do it. I want to know if I'm missing something. I read books. I can turn my computer on and see a whole bookshelf full of books I read. I read all the time. But the biggest advice I would give someone is find a mentor. And when I started, YouTube and it wasn't as big a deal back then. And it took me a long time to find someone who was where I was at or where I wanted to be. Probably, I don't know, 7 years before I ever asked for help or even talked to someone, sat down at lunch and found a mentor. So that's the biggest thing I think that has propelled my trajectory and my successes. Finding people who are where you want to be. Of course, it helps if you can add a little value to them. For me personally, I bought the guy's 8-unit building. That was enough value to get me a few lunches and talk to him. But I don't think there's anything more important than finding a mentor or mentors.
Got it. No, I love it. Tom, honestly, it's been a pleasure having you on. That's all the questions I had for you. Thank you so much for coming on Groundbreakers and sharing your story. For listeners that want to learn more about you or North Corp Capital, where should they go?
Well, they can find me on LinkedIn, North Corp Capital or Thomas St. John on LinkedIn. They can also go to www.northcorpcapital.com. And I will say real quick, Domingo, one of the people I found that's helped me along this way is yourself with the platform that you've built. Just truly amazing. And I couldn't have done it without you. And you'll be one of the people that accelerates my growth and my investors too. So Also call Domingo. That'll help you out a lot too.
Well, that means a lot, Tom. I really, really appreciate that. But it's been such a pleasure having you on. And thank you, everyone, for listening to another episode of Groundbreakers. We drop episodes every week, and we'll continue to have awesome guests like Tom on the show. Thanks again for coming on, Tom.
Thanks. Thank you for your time, Domingo.